The Absa Purchasing Managers Index PMI rose to 50.8 in July 2025, up 2.3 points, marking its first expansion since October 2024. A 9.7-point jump in new sales orders to 55.9 reflects strong demand, with slight gains in supply deliveries and inventories. However, business activity remains at 47.1, employment fell to 43.7, and rising costs poses challenges. Now, despite uncertainties, the PMI's uptick hints at a cautious recovery for South Africa's manufacturing sector. And joining me now is Andiswa Nondudule, ABSA CIB Economist. Good afternoon and thank you for joining us.
Good afternoon.
What's driving the strong recovery in new sales orders?
I think it's difficult to tell, but I think, if you look at the activity data, we are starting to see sort of some signs there. We did have, an increase in manufacturing production in April and May. So I think it's just a continuation of that. So some of that demand, saying that maybe there's some, pickup in growth from the economy starting to take effect.
Can you explain why business activity remains in contraction despite demand growth?
Yeah, I think what we would need to do in order to see, that new sales orders index sort of tip over that 50 mark is to see sort of a sustained improvement in that demand sub-index as well, because that has also been below 50 for quite some time. So I think now is just the first print in many months that it's been above that 50 mark. So I think we need to see a sustained improvement before we can see sort of activity pick up as well.
Now, what factors are causing the decline in the employment index?
Yeah, so I think just the general, historical effects of low growth in South Africa have probably affected, the low employment levels. The manufacturing sector has really struggled to recover from, the job losses that we had during the COVID period, even though we have sort of done a significant recovery if you look at, the SABC data. But I think some of those lingering effects from when we had lost a lot of jobs from then. But as I've said, coupled with generally a low growth environment has likely contributed to low employment levels within the sector. But I think that manufacturers are looking to see that sustained improvement in demand, sustained improvement in activity levels before they can invest in employment.
How are rising input costs impacting manufacturers' margins?
Obviously, rising costs for any business, for any sector is not a good thing. And what we think likely drove that slight increase in prices in July was the petrol price hikes that we saw at the start of the month. So I think going forward, our expectations is that we are likely to see a continued disinflation in fuel prices, which is likely to probably add a bit of support for the sector.
And lastly, I'm just going to squeeze this question in. What are your views on how the new tariffs imposed by the United States on our exports will hit our economy?
Yeah, so I think it's difficult to quantify in numbers, but obviously South Africa, as a small open economy, which would participate in terms of trade, and the US being, South Africa's second largest trading partner, it is quite a huge blow on South Africa. But I think hopefully we're able to, negotiate something before 7th of August. But I think it is going to obviously directly affect our trade via exports. It's likely to be a blow on the South African economy and the manufacturing sector as well, specifically.
Thank you so much for chatting to us. Andiswa Nondudule, ABSA CIB Economist.